Welcome to Mijun from United States Stock University, who focuses on fundamental United States stock investing principles. Let's start today's United States stock news for June 13th. As always, welcome to Mijun, who is sticking to the basics of United States stock investing. This week also went by so quickly. It's already Friday. Yesterday on the broadcast, I mentioned that I changed the format of the Mijun podcast, which I had ambitiously prepared at Mijun. After watching yesterday's broadcast, there was a lot of positive feedback saying that the podcast voice is really good. I'm creating the podcast using my voice and my wife's voice. Thanks to your support, I'll include another episode of the podcast at the end of today's broadcast and send it to you. And for those of you who really enjoy this kind of podcast broadcast, I think joining the Mijun All-in-One membership would be great for you to consider. There are actually a lot of series prepared in the Mijun membership, and one of them is the Mijun podcast. We upload at least 2 to 3 podcast episodes every day, and most of the content is about stock analysis of major stocks. Also, when something big happens in the market, we prepare podcasts where you can get a comprehensive look at various opinions on those events. In addition, we also provide outlooks on the United States stock market and deliver the fastest news in Korea. I'm also hosting Mijun, and we deliver today's United States stock videos by dubbing news footage from Bloomberg Television and Consumer News and Business Channel. It's a segment that many people love. With these various series, Mijun's All-in-One membership is here to support your investment activities. We ask for your continued love and interest. And I have one more announcement to make. Last week, you really enjoyed the video featuring Chief Executive Officer Kim Min-jung. This week, we've scheduled a weekend broadcast on the same topic. While recording the United States Stock Elementary School this weekend, I thought, this week's broadcast is really another amazing hit. I know you all have various plans for the weekend, but if you could take a moment, I think it would be great if you could check out the United States Stock Elementary School as well. Let's get started with today's big stock news for Friday, June 13th. Let's review the United States stock market trends from yesterday. First, if you look at the S&P 500 map, at a glance you can see that the upward trend continued yesterday as well. So, you can only spot red here and there. You can see at a glance that most sectors and stocks maintained a positive trend. Yesterday, there was also some good news that could lead the market in a positive direction. It was the announcement of the Producer Price Index, There was good news that both the headline Producer Price Index and the core Producer Price Index for May rose less than expected on a monthly basis. Let's briefly examine the Producer Price Index in the United States. Producer Price Index stands for Producer Price Index. In May, it rose by just 0.1% from the prior month. That means it showed a slight increase, lower than the expected 0.2%. Now, if you look down here, the core Producer Price Index, which is recalculated excluding the highly volatile food and energy prices, was even better. It only increased by 0.1% from the prior month, below the anticipated 0.3% rise. So, you can see that the inflation figure announced was significantly lower than expected. And I'm sure you all remember. The recently announced Consumer Price Index was very good. Producer Price Index stands for Producer Price Index, while Consumer Price Index is the Consumer Price Index. You can think of Producer Price Index as the wholesale price and Consumer Price Index as the consumer price. That's the difference between the two. The Producer Price Index that was announced yesterday tends to lead the Consumer Price Index a bit. If the wholesale price goes down, the retail price can also go down, so we can interpret this positively. Now, if you take another look, everyone, the May Consumer Price Index inflation, announced recently, rose by only 0.1% from the previous month, lower than the expected 0.2%. The core Consumer Price Index, excluding food and energy, also rose by 0.1% below the 0.3% consensus. So like this for 2 days in a row. As positive news about inflation was reported, the United States stock market generally gained momentum. It can be wrapped up like this. So, the breadth of the market must have improved a lot. Since there were many stocks that rose additionally yesterday, the ones with a good short-term trend it went up by as much as 78.17%. And the percentage of stocks whose prices rose above the 200-day moving average also increased to 51.19%. Therefore, the market sentiment, the fear and greed index, is also showing a stable trend. It hasn't budged from 61, it continues to stay in the greed phase. And as I mentioned yesterday, maintaining this level of greed without getting too overheated is actually very desirable. That's how we can interpret it. However, the Choi Style market score is still giving a signal that it's very hot right now. It's at 86 points. The market is extremely overheated. Therefore, it's giving investment advice that now is the time to consider gradually taking profits from overvalued stocks. Yesterday, Mijun top pick had a mixed performance, with roughly equal numbers of stocks rising and falling. Bistro had the highest increase of 4.24%. Credo Technology was up 3.77%, Celestica up 2.38%, Nvidia up 1.52%, Broadcom up 1.25%, Taiwan Semiconductor Manufacturing Company up 0.98%, Talon Energy up 0.06%, and Amazon rose slightly by 0.02%. Now, half of them fell. Meta closed down by 0.11%. Palantir fell 0.88%, Alphabet dropped 0.93%, and Bitcoin was unchanged. Uber was down 1.11%, Nextracker was down 1.21%, Strategy was down 1.90%, Advanced Micro Devices was down 2.18%, Tesla was down 2.24%, and Trade Desk was down 2.49%. Lastly, B2 dropped by 3.77%, showing the worst trend. Now, and you probably noticed this, if you look at the futures index below the current stock price, most of them are in red. They are dropping sharply. Now, if you look at the volatility index, it's the same. Until yesterday, the volatility index was very stable, but it suddenly crossed the 200-day moving average. It surged up to 21.05. You might wonder why the market's fear index is suddenly rising like this. And if you look at the futures index now, all three major indices are in the negative, and Nasdaq futures are showing a sharp decline of as much as 1.38%. The reason is related to the crude oil prices shown below. The price of oil has surged by 7%. Let me briefly show you what happened. Israel attacked Iran's nuclear facilities and military targets on Thursday night. Therefore, it's understandable that oil prices surged while stock index futures plummeted. And the situation isn't that good, because according to the latest breaking news, Iran has also launched more than 100 drones at Israel in a retaliatory attack. Therefore, there is a high possibility that the war will intensify, and as the possibility of it developing into a larger war increases, investors in the market are moving to safe assets. This is how we can wrap things up. So like this, today, the futures index is showing a sharp decline as Israel attacks Iran. In this situation, I don't know what actions you all are planning to take. Many investors think, oh, there's going to be a war. I should get out of the United States stock market now and make such decisions. On the other hand, I believe there are also many wise investors who use this as an opportunity to buy at a bargain. There's a message that I keep repeating to you over and over again. When making any decision, logic is extremely important. If we make decisions based on intuition or emotions, there's a high chance we won't make rational choices, and irrational decisions don't just affect stock investments, but every decision in life. The probability of success decreases significantly. Therefore, we make various decisions repeatedly in life, and for these decisions to lead to successful and positive outcomes. I want to emphasize once again that it is very important to always make decisions based on solid and logical reasoning. So in this situation where a war has broken out between Israel and Iran, I would like to briefly talk about what actions we should take. Now, let's scroll down and read Mijun's comment. Personally, I've been putting a lot of energy and time into Mijun's comments lately. The reason is, as I showed you earlier, most articles are now delivered to investors very quickly because of artificial intelligence. Also, these days, platforms like Seeking Alpha even have Korean articles popping up right away, so I personally think that just delivering articles is no longer competitive. Therefore, On the Mijun broadcast and in the Mijun All-in-One membership, I believe that the only way to survive is to share my insights, my investment philosophy, and strategies in more detail. Anyway, in this situation, I'll let you know what plans I have through a brief message from Mijun. Now, if you look at the title here, I've written Wars and Geopolitical Crises Since 2000 and the Response of the United States Stock Market. How has the United States stock market responded to major wars and geopolitical crises that have occurred since 2000? By looking at these statistics, we can use them as a logical basis to make wise investment decisions. That's the idea. As you can see, after experiencing a short-term decline, the market has repeatedly shown a pattern of recovery and growth in the mid to long term. Here, you can see it right here. Since 2000, there was the 9/11 terrorist attack, the Iraq War, the Madrid train bombing, and the London subway bombing. I still remember them vividly. I was living in London at that time. And then there was Russia's annexation of Crimea, the Russia-Ukraine war, and finally the conflict between Israel and Hamas. There have been several wars and geopolitical crises like these. And then, if you look at the initial market declines, it was minus 11.6%, 9. The September 11th attacks were quite significant, so I think the market dropped a lot for 5 consecutive days. And when the Iraq war broke out, it had already been priced in. After the stock price hit bottom and the war broke out, it actually started to rebound. During the Madrid train bombing, the drop was only minus 1.5%, and as I recall, the London subway bombing was a huge event, but the drop was only 0.7%. Russia's annexation of Crimea caused a 2% drop, and during the Ukraine-Russia crisis, it fell as much as 7.5%, showing a negative trend for an extended period. Finally, amid the Israel-Hamas conflict, it fell 4.4%. That's the key takeaway. And then, how did Mijun act? This is the key point. If you look at the returns after 1 month, except for the 9/11 attacks, in most cases, they turned positive. After 3 months, even during the 9/11 attacks, they turned positive. Only during the Russia-Ukraine war did it remain negative, and it was the same after 6 months. The reason is, as you all know, it was February 2022, which was the beginning of the bear market. The negative return is primarily due to the market entering a bear market, not the impact of the war. That's the correct perspective. Therefore, what we can see from the above statistics is that geopolitical crises definitely cause short-term volatility in the United States stock market. However, it was not a decisive factor in breaking the long-term upward trend. Thus, the United States stock market stayed its course. There may be a brief dip, a momentary change in direction, but then it returns to its original path. Now, in the case of the Russia-Ukraine war in 2022, it occurred during high inflation and aggressive Fed rate hikes, indicating a bear market. Therefore, the recovery was slower compared to other events. What that means is, when geopolitical risks are combined with other macroeconomic negatives, it becomes a very significant negative factor. On the other hand, after the 2023 conflict between Israel and Hamas, the market showed a solid upward trend. After 1 month, it increased by 1.6%, then by 10.6% after 3 months. It surged over 20% after 6 months. So what this means is that investors were briefly shaken by the war, but quickly regained their composure. So in conclusion, historical data shows that when stock prices fall due to war-related news, it can often be a buying opportunity from a mid to long-term perspective. Here, I've written down the median returns and the average returns. The average return increased by 2.6% after 1 month, by 4.86% after 3 months, and by as much as 8.67% after 6 months. It's the same for the median return. It goes over 8% as well. Thus, the likelihood of investment success is quite high. This teaches us that when stock prices fall because of a war, we should buy stocks. Of course, every crisis has its own unique context. Past data doesn't guarantee future returns, just a higher probability, not 100%. But from our perspective as investors, I told you that we need to keep watching how this crisis unfolds and that we shouldn't confuse it with the overall economic situation. So I think it would be good to keep checking whether the macroeconomy is holding up firmly and to keep adjusting our investment strategy accordingly. In the next article we've prepared, Meta appears. There's a company that Meta is investing an astronomical amount of money in this time, and that company is called Scale Artificial Intelligence. They're not fully acquiring this company. They're investing a whopping $14.3 billion just to secure a 49% stake. But if you look at the title of this article, you'll see that not only is Meta investing in the company, but there's also surprising news that they're bringing in the chief executive officer of this company. Now, this is the person. Some of you might find him a bit familiar. He's the person who appeared in the Today's United States Stocks video I sent you back in January, right here. I think it was around the end of January back then. Alexander Wang, the Chief Executive Officer of Scale Artificial Intelligence, has provided some very deep insights into the artificial intelligence competition between the United States and China. It's a video that's almost 8 minutes long, and you'll be surprised when you watch it. You can really feel that such a young person has incredible insight. At that time, up to 2,154 people viewed this video. So many of you likely remember it. Alexander Wang, the founder and chief executive officer of Scale Artificial Intelligence, previously said something. Despite the United States' export restrictions on NVIDIA GPUs, Chinese research institutes like DeepSeek are quickly closing the gap. He expressed these concerns. And he also emphasized that in order for the United States to maintain its lead, it must make massive investments in computing infrastructure. And finally, he emphasized the tremendous growth potential of the market. Artificial general intelligence, which we call artificial general intelligence, refers to a much higher level of artificial intelligence. You can think of it as surpassing human capabilities. But now, since artificial general intelligence is not far off, the current artificial intelligence market, which was worth $10 billion, will expand to $1 trillion in revenue. This means that in just a few years, the market will grow about 100 times from its current size. That's what I'm saying. According to him, artificial general intelligence is defined as artificial intelligence that can use computers to perform complex tasks like a human. And surprisingly, he has predicted that artificial general intelligence will emerge in 2 to 4 years. Now anyway, the chief executive officer who appeared like a comet in the artificial intelligence industry is Alexander Wang. And the surprising news is that Meta is recruiting Alexander Wang this time. Meta has invested in Scale Artificial Intelligence, a data labeling startup. With this deal, Scale Artificial Intelligence's corporate value has been estimated at $29 billion, and the 28-year-old chief executive officer Alexander Wang has taken on an important role in the artificial intelligence strategy of this tech giant. Meta plans to acquire a 49% stake in Scale Artificial Intelligence by investing a total of $14.3 billion. According to Meta's statement, we will deepen our collaboration to produce data for artificial intelligence models, and Alexander Wang will join Meta to work on our superintelligence. Superintelligence is now referred to as superintelligence. This refers to artificial general intelligence, which was explained just before, and he will join the efforts to develop artificial general intelligence. They're saying that we need Alexander Wang in order to become the #1 artificial intelligence company. And according to the news, the main reason Meta invested a significant amount in Scale Artificial Intelligence was also to recruit Alexander Wang to lead a new superintelligence division, even though it was a risky move. Meta's $1.43 billion investment is the largest it has ever made in another company. The only exception is WhatsApp, which was a bit more expensive than this. Even the well-known Instagram didn't reach $1 billion. So, they're investing a huge amount of money in Scale Artificial Intelligence this time. The reason was to recruit Alexander Wang. That's an incredible recruitment. And Meta, which was once recognized as a leader in open-source artificial intelligence models, has been struggling due to employee departures. They have postponed the release of a new open-source artificial intelligence model that could rival competitors like Google, Open Artificial Intelligence, and China's DeepSeek. It's not being developed as well as expected, so we can sense these difficulties. So, although it's not about releasing research backgrounds, by recruiting Wang, who built major artificial intelligence businesses, Meta's chief executive officer Mark Zuckerberg is focusing more on this than most research scientists leading competing labs. They're saying that Meta's artificial intelligence efforts could be transformed by a skilled business leader like Altman. Alessandro Wang said this in a memo sent to employees on Thursday. A few employees from Scale Artificial Intelligence, a company with about 1,500 people, will move to Meta with him. So, we can infer that only the elite are joining Meta right now. Wang will remain on the board of Scale Artificial Intelligence. As I mentioned earlier, what about this investment? after Meta acquired WhatsApp for $19 billion. This is the second largest deal in its history. Scale Artificial Intelligence, founded in 2016, provides vast and accurately labeled data that plays a crucial role in training sophisticated tools like Open Artificial Intelligence is ChatGPT. To achieve this, Scale Artificial Intelligence operates subsidiary platforms such as Remotask and Outrider. Through these platforms, they have recruited and managed gig workers who manually label data. I'm not sure if you remember the term gig worker. It refers to freelancers. So this is a company that hires a huge number of freelancers to do data labeling. So what this means is that when we use data to train artificial intelligence, there are a lot of manual processes we have to do ourselves during the training. What this means is this. Now, when we look at pictures, we have to decide that some are cats, meaning we have to think of them as cats, some are dogs, and some are cows, and classify them like that. At first, a person has to teach this. So, what is manual data labeling? It's the process where a person opens each piece of data and marks its meaning or the correct answer one by one. Initially, artificial intelligence needs to learn this way. That's how you should view it. And if it's text, you have to read the sentence and decide whether the emotion is positive or negative, then tag it accordingly. If it's an audio file, you need to label it as a siren sound if that's what it is, or if it's an engine sound, you have to teach it by labeling it as an engine sound. Only when there are accurate answer labels assigned by humans can the artificial intelligence model learn those patterns and predict the correct answers on its own with new data. Therefore, we can understand that data labeling is an essential and important process that cannot be omitted when using data for artificial intelligence. Now, I'd like to share my personal thoughts on why Meta acquired Scale Artificial Intelligence, aside from Alexander Wang. The performance of an artificial intelligence model is determined by the quantity and quality of its training data. If the data is wrong, the results will also be wrong. That's why the quality of accurate data is so important, and we can infer that a model with a lot of high-quality data is a truly excellent artificial intelligence. And Meta already has nearly 4 billion monthly active users. So the amount of data is enormous. But the problem is, even though they have secured such massive amounts of data, it takes a huge amount of cost and time to process it into a form optimized for artificial intelligence training. So Meta is probably one of Scale Artificial Intelligence's biggest customers, or at least that's what we can infer. And as I explained earlier, Scale Artificial Intelligence is a company that has a platform capable of precisely processing text, images, videos, and even sensor data through hundreds of thousands of contract workers around the world. As mentioned, Scale Artificial Intelligence employs hundreds of thousands of freelancers and contract workers to manually label data. Therefore, through this investment, Meta can become the major shareholder of Scale Artificial Intelligence, and instead of just being a simple collaborator, they can tie Scale Artificial Intelligence, the strongest player in the data processing field, as a de facto partner. This is the biggest benefit. Through this, Meta will be able to secure a strategic advantage by receiving high-quality data more stably and preferentially compared to its competitors. Through this investment, Meta has secured a 49% stake in Scale Artificial Intelligence. What that means is that they can exert tremendous influence. Therefore, it can be understood that they have secured a very advantageous position to receive high-quality data faster, more effectively, and before other companies in the future. And one more thing, there's another important meaning to this investment. It means securing another profitable market. There's another article below, and what this article says is that Meta and Scale Artificial Intelligence are both showing a shared interest in defense technology and are jointly developing a model called Defense Llama. This news is being reported, and what that means is that Scale Artificial Intelligence already has a very close relationship with the United States Department of Defense. Therefore, through this investment, Meta may be able to use its artificial intelligence technology as a foothold to expand beyond social media into high value-added markets like defense and government agencies. We can have some expectations about that. So, in conclusion, Meta's investment in Scale Artificial Intelligence is a very concrete and powerful move to make Meta's recent all-in artificial intelligence strategy a reality. It's a masterstroke. That's my personal assessment. There are three positive aspects. First, as I mentioned earlier, they've secured a position where they can prioritize access to optimization level data. Second, by bringing in Alexander Wang, they can accelerate the pace of artificial intelligence development. Third, they're establishing a very advantageous position to pioneer new, highly profitable opportunities in government and defense business. On the Mijun channel, we run something called Mijun Top Pick. So I personally create a portfolio of the stocks I evaluate most positively. I only provide investment information to you about the stocks I personally invest in. About 5 weeks ago, I added 2 new stocks to Mijun's top picks. At that time, the broadcast aired on May 6th, and I added those 2 stocks. And as written in the title here, one of the stocks was Advanced Micro Devices, which I newly bought, and the other was a new top pick with about 50% potential for growth. I revealed to you that I bought these 2 new stocks. At that time, it was a stock I newly bought on May 5th. The first stock was Advanced Micro Devices, and the second was the Trade Desk. I newly bought these 2 stocks and included them in the United States stock top picks. Now, after doing this, these choices have shown very positive results so far. In the case of Advanced Micro Devices, the stock price has surged by 17.8% from May 5th until now, and the Trade Desk performed even better. It has achieved a remarkable surge of 27.15% in just 1 month. So, for those of you watching this broadcast, if you bought these 2 stocks around the same time as I did a month ago, you would have made a very satisfying profit. And for those of you who are watching this broadcast for the first time, you might feel a bit regretful thinking, I should have bought it back then. But in my opinion, these 2 stocks still have a long way to go. Especially in the case of Advanced Micro Devices, I want to tell you that it's not too late to invest even now. Today, I'd like to explain the basis for this claim in detail. First, let me show you a stock price chart. Recently, in my stock analysis videos, I've always been showing detailed analysis of stock price charts like this. The 5-year long-term stock price chart of Advanced Micro Devices is very important. Now, if you look here, for the past year, from 2024 until now, it has been maintaining a continuous downward trend. A channel has formed, and as you can see, the trend lines are very evenly distributed both at the bottom and at the top. This means that by drawing parallel lines, it still hasn't escaped the downward trend yet. Now, in order to break out of this downward trend, it needs to break through the $130 level here. Only by breaking upward through this level can it break the trend line and finally shift into an upward trend. What that means is, compared to its previous high, Advanced Micro Devices is still quite far below, and in fact, it hasn't really entered an upward trend yet. I think that's the right way to look at it. Now, there was some very important news announced yesterday, so let's read this article together. Lisa Su, Chief Executive Officer of Advanced Micro Devices, is present. As the number of artificial intelligence or artificial intelligence models is increasing explosively, it was revealed that the current demand for artificial intelligence inference is surpassing the demand for artificial intelligence training. I briefly mentioned this on yesterday's broadcast as well. Artificial intelligence is divided into 2 main stages. The first is the training stage, where the artificial intelligence is taught, and the second is when you finally put what the artificial intelligence has learned to use. We call this the application or deployment stage. Now, as I mentioned to you, I currently use and pay for 10 different applications through paid memberships. That shows just how many people are using artificial intelligence these days. And another important thing is, even if you're not a paid customer, you still have to keep running queries to use the artificial intelligence model. So even if you don't sign up for a membership on ChatGPT or Gemini Artificial Intelligence, in other words, even if you're not a paid customer, if you keep chatting with ChatGPT or keep asking it to draw pictures for you, every time you use these services, the GPU keeps running. Think about it this way. What about Chief Executive Officer Lisa Su at Advanced Micro Devices as Advanced Artificial Intelligence? 2025 conference held today in San Jose, California, Lisa Su said that while training will always be the foundation of model development, the demand for inference has skyrocketed due to more capable models and the increase in use cases. Well, of course, there may be limits to training, but there are no limits to the applications that use it. Recently, a huge number of startups have been emerging. These startups use GPUs and computing power to run these kinds of applications. She said that models for specific purposes, especially in areas like coding, healthcare, and finance, are increasing explosively. It is expected that in the coming years, hundreds of thousands and ultimately millions of specialized models tailored for specific tasks, industries, or use cases will emerge. That's a pretty credible prediction. That's because new artificial intelligence models are emerging in every field, and there are just so many areas where we can use artificial intelligence. We need to translate, chat with friends, use it for content like I do, use it in the medical field, for coding in finance and in industry as well. So there will be countless different models, each with its own purpose, and all of these models will need GPUs and computing power. That's how you should see it. So this requires much more computing power. This is a good thing for us at Advanced Micro Devices. Of course, right? And another thing, agents are also increasing the demand for GPUs. You all remember agents. Agents don't just help in a simple way like this. We call something an agent when it makes decisions on its own from start to finish and does a person's work instead. The abilities of agents are growing with an expanding range of applications. Therefore, it is explained that this has the same effect as adding millions of users to the global computing infrastructure. What about Lisa Su? She said that the expected demand for data center computing needed to power artificial intelligence continues to increase. Here come the specific numbers. Last year, we called the entire data center artificial intelligence accelerator market the total addressable market, which stands for total addressable market, and said that this market would grow by more than 60% annually. When Lisa Su talked about this at the time, it was really big news. There were a lot of people who doubted whether the artificial intelligence accelerator market could really grow by 60% annually. What did a 60% growth projection signify back then? The prediction was that by 2028, the market size would reach about $500 billion. At that time, it seemed like a really big number, but if we put together everything we're seeing today, that number will be much bigger. So that means by 2028, it's not just $500 billion, but $700 billion, $800 billion, or even $1 trillion is possible. I'm saying the same thing as Alex Huang earlier. We're now seeing an inflection point in inference, and the reason these projections are being revised upward is precisely because of inference. Now we're raising our estimates, thinking that the field of inference will grow by more than 80% each year over the next few years and become the biggest driver of artificial intelligence computing. Lisa Su, the chief executive officer, also unveiled the new MI 350 series GPUs and confidently stated that customers like Meta Platforms, Elon Musk's xAI, and Microsoft are preparing to upgrade from the MI 300 to the MI 350 series. She emphasized the importance of the open source ecosystem, saying that they are making significant investments in open ecosystems, supporting all frameworks, and providing full stack solutions. She stated that they believe open ecosystems are essential for the future of artificial intelligence. No matter where artificial intelligence runs or how much computing power is needed, Advanced Micro Devices has the right solution. Innovation truly begins in open systems. What this means is the opposite of closed is open, right? A closed system means there is an economic moat. This is exactly what we're talking about with CUDA. When we explain NVIDIA's strengths, we say that with the CUDA software, you're trapped in this platform and can't get out. We can see this as the opposite of open, meaning it's closed. Now, when we say we're investing in an open ecosystem, anyone can come and go freely. They're saying don't just use NVIDIA after coming to us, but come here and use Advanced Micro Devices' GPU as well. Our growth engine is accelerating. We ended the last quarter with a record 40% market share. What does this mean? NVIDIA still holds about 90% of the artificial intelligence accelerator market, so 40% doesn't make sense. So they're excluding all the existing customers and only talking about the newly emerging customers. So in the case of very small startups, they're boasting that they have a 40% market share. Advanced Micro Devices announced that it powers the 2 fastest supercomputers in the world. Today, it was revealed that as many as 7 out of the top 10 model makers are using Advanced Micro Devices Instinct in their data centers. So, more and more large-scale companies are also using Advanced Micro Devices as Instinct in their data centers. Instinct is the model name. You can think of it as a brand name. Lisa Su also introduced the MI 355, which has 35 times better performance than the previous series. So after the MI 300, they announced the MI 350 this time. You can see that this one has improved performance by as much as 35 times compared to the previous series. And what about the MI 355? They announced that it is either equal to or even surpasses the performance of NVIDIA's flagship B200 GPU. She added that the MI355 delivers 40% more tokens per dollar than competing GPU solutions. Now, we are already deeply involved in the development of the MI400 series aiming for a release next year. So the specifications keep going up. Just like NVIDIA, we are expressing our ambition to release new products once a year. However, today they announced that they are very pleased to launch the MI350 series and that the MI355 is their flagship product. Now, at this event, Eric Boyd, Vice President of Microsoft's Artificial Intelligence Platform Division, attended. He said the following: Advanced Micro Devices has large memory capacity per chip, so it offers significant advantages when running large language models, or LLMs, they announced. Compared to training, the stage called inference is where memory becomes extremely important. It needs to run quickly, right? Advanced Micro Devices' strength lies in its memory, which could make its GPUs more popular in the era of inference, something to look forward to. Let me sum it up in one word from Mijun. Lisa Su said that true innovation begins with open systems. This goes beyond simply supporting open source frameworks. It's a strategic declaration directly targeting NVIDIA's most powerful weapon, the CUDA ecosystem. That's how I see it. Of course, NVIDIA also supports open source artificial intelligence frameworks these days. If there's one difference, it's that all these open source artificial intelligence frameworks run on top of CUDA. So, while they are actively embracing open source, they are also continuing to strengthen the dominance of their proprietary platform, CUDA. That's what we can observe. So NVIDIA's strategy is that no matter what open source tools developers use, the final destination is always CUDA and NVIDIA's GPUs. That's how you should see it. On the other hand, Advanced Micro Devices is a latecomer. Their market share is still quite small. So, you can see that they're using openness and freedom of choice as their main weapons. What that means is there are companies out there that don't want to be dependent on the NVIDIA ecosystem, right? So, they're targeting these kinds of companies and research institutions. This can be interpreted as a strategy to break NVIDIA's monopoly and gain market share. Now, of course, up until now, Advanced Micro Devices' strategy hasn't been as effective as expected. If you look at the numbers, this becomes clear. As of 2024, NVIDIA's data center revenue is a whopping $47.5 billion. But during the same period, even if you combine Advanced Micro Devices' data center revenue with their successful CPUs, it's only $6.5 billion. So there's a huge difference. It's almost 8 or 9 times more. That's how you should see it. However, recently, Open Artificial Intelligence formed a partnership with its competitor, Google Cloud. I sent you this kind of news a few days ago, remember? What that means is that the demand to secure computing power is outpacing the supply way too quickly. We must try to understand this situation. Now, also, as Dr. Lisa Su mentioned, if the application sector can grow by more than 80% every year in the future, there is a good chance that Advanced Micro Devices, which is showing a significant gap with the number one NVIDIA, could benefit the most. This is what I think. Now, let me tell you why. If we assume that the GPU supply situation is accelerating, getting worse, and becoming more severe, wouldn't there be a lot of demand in NVIDIA sales that NVIDIA can't absorb? So if NVIDIA's sales are $100 billion, then NVIDIA is a company with the potential to make $110 or $120 billion, but the $10 to $20 billion in sales might not be fully absorbed and could end up going to Advanced Micro Devices instead. If that happens, even if Advanced Micro Devices secures just 10% of NVIDIA sales, it would result in a rise of over 73% for Advanced Micro Devices. That's because Advanced Micro Devices' market share is still very small, so if they can secure a lot of the overflow from NVIDIA, Advanced Micro Devices' future could be very positive. This is the investment logic I have for Advanced Micro Devices. What's the last segment prepared for today's broadcast? As I mentioned earlier, it's the Mijun podcast. Now that my wife's voice is also appearing, I think we should change the name to Mijun, or Mijun podcast. Anyway, today's podcast is also about Advanced Micro Devices. In a way, today's broadcast kind of feels like an Advanced Micro Devices special. Now this time, it's not just my personal opinion. Let me briefly introduce you to another investor's opinion regarding Advanced Micro Devices. Now, according to the contents of this very lengthy report, They give 3 reasons, saying that advanced micro devices is currently a bargain buying opportunity. That's how we can understand their argument. Now, through this forecast, I think it would be good for you to listen and easily and enjoyably understand what their argument is and what kind of logic they're presenting. That's all for today's broadcast. I sincerely thank everyone who invested in United States stocks with Mijun again this week, just as always. Recently, various changes have been attempted on the Mijun broadcast. If you leave your feedback, I can reflect it right away, and it will be very helpful in delivering even better content. Let's all keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you. Thank you. We uploaded our artificial intelligence voice with half worry and half anticipation. Did it sound okay to you? Thanks to so many of you cheering us on in the comments, I was able to spend yesterday with peace of mind.
Thank you so much for all the supportive comments. Since it's based on high-quality articles we've analyzed today,
What we'll be looking at together is a very interesting analysis article about advanced micro devices stock.
yes, recently the stock price trend has been good and there have been several positive outlooks.
Through this Seeking Alpha analysis article, I'll closely examine advanced micro devices' current situation and future outlook.
Yes, our goal for this discussion is to extract key information that can help the Mijun family make investment decisions.
All right, then shall we dive in deeper? First of all, what stands out the most in the article is definitely the recent performance. Especially the performance in the last second quarter was impressive.
Yes, did you see those numbers?
Compared to the same period last year, sales increased by 36% and earnings per share surged 55%.
Wow, and usually the first quarter is the off-season for tech stocks, right? Considering that, aren't these really impressive numbers?
That's right, it's really an amazing achievement. Behind that, of course, is the surge in demand for data centers.
Data centers, yes.
Especially with giant tech companies like Microsoft and Google. As these companies compete to build artificial intelligence infrastructure, the demand for advanced micro devices, EPYC server CPUs and Instinct GPUs has just exploded. If you look at just the first quarter data center revenue, it's $3 billion, which is a 57% increase compared to last year. That's 57%. Yes, but what's even more interesting here is the increase in market share based on revenue for the EPYC CPUs. It went up by 6.5 percentage points, which is much higher than the increase in market share based on sales volume, which only went up by 3.6 percentage points.
What does that mean?
So it's not just about selling a lot of chips. It means advanced micro devices is definitely establishing itself in the so-called premium product market, which is more expensive and profitable.
With premium products?
Yes, this can be seen as a much stronger signal for improving profitability.
I see. While data centers are a hot topic and seem to get the most attention, the consumer sector is also quite significant.
That's right. In the article, they even referred to it as the unsung hero.
Yes, the unsung hero. I saw that expression too. Thanks to the new Gen 5 architecture-based desktop central processing unit client segment, sales grew by 68% year-over-year in the first quarter.
68% is incredible.
It really is incredible. In the past, when people thought of advanced micro devices, it had a bit of a budget-friendly, cheaper image, but things have really changed, haven't they?
Especially models like the Ryzen 7000 880X3D are popular among gamers because they offer great value for money and performance, especially in gaming.
That's right, and we can't ignore their enhanced artificial intelligence competitiveness either.
Of course, that's important. The soon-to-be-released MI 355X Artificial Intelligence Accelerator. This is said to be specially designed for inference workloads, especially for deployment.
Deployment? What exactly is that?
Simply put, inference is the process where artificial intelligence makes predictions or decisions based on what it has learned. But this MI 355X chip is equipped with 288 gigabytes of memory, which is more than the latest Black GPU B20 from the competitor NVIDIA.
288 gigabytes is an incredible amount of memory.
Yes, and the reason this is important is because it allows the chip to handle larger and more complex artificial intelligence models directly. You might miss out on the speed or efficiency of certain inference tasks.
I see, of course.
There's still that strong barrier of NVIDIA is CUDA ecosystem. That's true. But advanced micro devices is really closing that gap quickly through hardware specs and optimization for certain tasks. And they've already announced plans to release the MAAE 400 series in 2026. What's interesting is that consumer CPUs are now becoming advanced micro devices' real cash cows. The Ryzen 7080 X3D gaming central processing unit with its abundant cache memory is currently gaining popularity.
The client gaming division's operating profit increased by 109%. Wow. Advanced micro devices used to only make CPUs, but now they're dominating even the premium market. At this point, is Intel okay? I want to ask, is Intel alright? Yes, since we're talking about competitors, we can't leave Intel out. We're hearing news that Intel is preparing a comeback by releasing new products based on their latest 18A process technology.
That's right, so
I think our Mijun family members might be curious about this part as well. How much of a variable do you think Intel's moves will be for advanced micro devices investments? What's your analysis on this?
the analysis by the article's author is quite interesting. Looking at both scenarios, surprisingly, I think both cases are favorable for advanced micro devices.
Both are favorable, yes.
If Intel successfully resumes, the market will become a stable duopoly, meaning both companies will share the market and both can benefit. On the other hand, if Intel continues to struggle, the analysis is that advanced micro devices will take more market share and strengthen its dominance.
So whether Intel does well or not, advanced micro devices will be fine. That's kind of the nuance here.
That's right. In a way, it seems to emphasize advanced micro devices is somewhat asymmetric advantage. Fundamentally, advanced micro devices has both central processing unit and GPU technologies, and the diversification and synergy that come from this are very powerful weapons.
Understood. All right, then let me summarize. Advanced micro devices is showing truly impressive growth thanks to its strong data center and artificial intelligence momentum, as well as the successful revival of its consumer division.
Yes, that's right.
Of course, intensified competition with Intel is a variable, but the author of this article highly values advanced micro devices' long-term growth potential and has given a strong buy recommendation. Yes?
That's quite a positive outlook. The guidance for this quarter is also very optimistic. Sales are $7.4 billion with a 54% margin. There's nothing lacking.
Here's the bottom line. Artificial intelligence accelerator market growth, increased server central processing unit share, higher consumer central processing unit profits, and better pricing than NVIDIA,
We're not seeing advanced micro devices as just a short-term momentum play, but as a company benefiting from structural changes. So this article is also concluding with a strong buy recommendation.
Of course, as I always emphasize, please remember that this is just one analysis result. Our Mijun family, your careful judgment is the most important thing. I hope that what we talked about today was helpful for your investment decisions, even just a little.
Lastly, I want to leave you with a question to think about. This article kept emphasizing the synergy between central processing unit and GPU technology as advanced micro devices' strength. Yes.
That's right.
But what if the direction of the artificial intelligence market's development turns out to be a bit different from what we expect now? For example, what if the importance of training becomes overwhelmingly greater than inference? Or if a completely different form of artificial intelligence computation becomes the mainstream?
Yes, that could happen.
Then how might the value of this central processing unit and GPU synergy we're talking about now change? I think considering this as well could help you make a more informed investment decision.
I hope this podcast has been a small guiding light on your investment journey. Thank you so much for listening all the way through, even though the artificial intelligence voice might have sounded a bit awkward.
Then see you again in the next episode. Mijun family, I hope you always stay healthy and make wise investments.
Thank you.
Thank you.